All right. Okay, sweet. So once again, good to have all of you here. All right. So I decided to do a quite last minute impromptu session, live stream, and also Q&A, right? Because I happen to have a slot tonight, right? Because initially I was gonna have a call with one of my mentees, right? Investment mentee to like coach her a bit, but she couldn't make it. So I thought, maybe I convert this session to a live stream, right? To benefit my whole community over here. Okay, so guys, right now when we are looking at the markets, okay, can y'all type your feeling in the chat? Your feeling in the chat. Okay. What's the one statement that you will say about the market right now? Okay, so PS is saying we are using toothpick to keep our eyes open. Wow, PS, thanks for coming. Hey, but you sleep so early. Okay, PS, in that case, right, I will guess you are a very young person because for all the parents like myself, hey, actually 10 p.m. just nice, because you know why not? I just happened to put my daughter to bed. Okay, wow, tech stock crash. Wow, Kimi is excited. Yes. Okay, all right. So the thing is this, how many of y'all feel that wow, this is super uncertain, what is happening, why the market keep dropping, all right, okay, so let's look at what is happening right now, right? I just give you a very quick spiel. I don't know how many of y'all watched my YouTube video that I just produced today. Took me quite a while to put it together, so do go and watch it. A lot of good nuggets there. But let me just add a little bit more, right? Is that the market right now is not unpredictable. Okay, if anything, I feel that the market right now is very predictable. It's very predictable. You know why? Because of one simple logic. Whatever goes up must what? Whatever go up must come down. Okay? Must come down. Okay. So let's look at the chart over here. Ethan say good morning. Why Ethan? Hey Ethan, good night. Okay, or where are you? Okay. Okay, this is for those of you who are not from Singapore. Maybe good evening, good afternoon. Okay. But let's look at the market right now, right? See very clearly what we are experiencing is not surprising. Okay? It's just part of the movement. Right? It's just part of the movement. Okay. In fact, for example, S&P, I think haven't fall enough yet. I think it will at least fall until 50 moving average. Why am I saying that? It's because the last time we had a good pullback in the March, April area. You can see my screen, right? Okay. Right, in the March, April area was here. Was about 50 moving average. So I do expect the same thing to happen first, right? For it to take place, right? So shouldn't be too surprised. In fact, it should be something that you are expecting to happen. Same for Nasdaq, right? The previous low was actually even at the 100 moving average. So that is the one key thing that people must be aware of. The market is never gonna be a straight line up, never. Okay. In fact, if you look at S&P, the recent dip is a much smaller dip than the dip in April. So how long ago was that? That's just 3 months ago. So guys, what is happening in the market? The market is suffering from amnesia. the market is suffering from short-term memory. They forgot that actually this is something that we should expect it to happen. Okay? But at the same time, when these are happening, right? Actually, there are still a lot of opportunities out there currently. I don't know whether you all realize that. Okay? Right? So, what happened to my screen? Wait, let me just... wait, this is so weird. Let me just look at my screen again. Okay, let me share back my screen, so that y'all can see. Okay, can y'all hear me again? Let's just double check, Can you hear me again? Yes, okay, good. Okay, so this is not something that we should be very surprised. We should expect this to happen. Okay, because if you look at, for example, the main market index right now, right? Can you see that a lot of the good companies are already down already? Right? So a lot of people say this is the big rotation or whatever, not right? To me is this. There's no such thing as rotation one. You know what is happening? Basically, previously the whole stock market was being dragged up by the whole tech industries, right? So if you take, for example, SPY, okay, and those of you who watch my YouTube, you will know this. If I take a equal weighted S&P 500, the gain is half. If I just take year to date, S&P 500 did 15, the RSP did 6%. That means the equal weighted S&P 500, that means in this case, your mega companies are not weighted as heavy, like Apple, Microsoft. They are all weighted the same, right? They are all weighted at an equal percentage, right? Actually, your gain will be so much lesser. So what is happening right now is what we call the broadening of the bull market. That means other sectors are slightly catching up. Okay, the other sectors are catching up because if you look down, if you look at, for example, the small indexes, so I delete this one first. We put IWM. Okay, so this is the Russell 2000, right? The small cap. Hey, the small cap is doing well, catching up. Okay, so to me, this is fully expected. Very, very healthy. Okay, right? So let me go through some of the stocks that interest me. Okay, number one, to me, Apple looks very, very interesting. Okay, I don't think it's ready yet. I think there are more opportunity for it to go down. Okay, right? So you can see the MACD is not quite there yet. This is not quite there yet, but on the way now. Very healthy. I've been waiting for this dip for like don't know how long already. Okay, hey guys, by the way, if y'all got any questions, put in the chat, or any stock you want me to take a look at, okay, put in the chat. All right. So that's number one. Number two, I want to look at AMD. AMD to me right now is also very interesting. We are right at the 200 moving average. And the indicators look way better. Way, way, way better. Okay, so this one is interesting as well. All right. In fact, yesterday I just entered a little bit of AMD as well. Okay. Another one, ASML, tech business, right? This is a chip machine maker. The MACD looks good. Stochastic is great. William R is great, right? So among all these pullback, I want all of you to, at the same time, right, think about, hey, what is the mindset that I'm having right now? Am I cheering because now I can buy my stocks cheaper, or am I very worried? Okay. If you're worried, then one thing I would encourage you to do, right, is to do deeper research into the company that you're holding. Okay. If you don't have very strong conviction, then that's where you will panic. Okay. But if you have very strong conviction, you know what you're holding, you know these are good stuff, these are good investment. I'm going to bring it to the grave one. Okay, don't say so Bobby lah. I want to bring it to greater heights. You should be buying more. Okay, but at this moment, how do we buy more? Very simple. Don't straight away go in and buy. For example, I think just now someone put in CrowdStrike, right? Let's take a look. Okay, by the way, I'm not a fan of a SaaS company. Okay, I just say all right first. I'm not a fan of SaaS company. Why? Because I don't know what is the economic mode as in how loyal the company will be. Plus, the valuation is quite steep. Okay, so first thing is this: when you see a mega drop like CrowdStrike, okay, when you see a mega drop like CrowdStrike, first thing is this: don't react immediately. Be patient. Okay, stand aside. Right, stand aside and take a look. Right, I think this phrase came from Warren Buffett. He say, when there's blood on the street, right, take a look. Warren Buffett never say when there's blood on the street, go and drink the blood. Take a look. Take a look at what? Wait for the price to stabilize. So can you see that after 3 consecutive big drop, now it's slightly stabilizing, but we are still waiting a bit. Okay, I'm still waiting for it to have a slight recovery. Now you might say that, hey Pete, after that slight recovery, I'm late already. Doesn't matter. Because with the slight recovery, at least I have that confirmation that the price is going up. Okay, y'all get what I mean? If y'all understand, type in yes. Okay, so here I want to wait for the MACD to be more pinkish. I want the RSI to be more established. But stochastics and William R is very good. Right? All these are very solid. Right? Okay, so that's one thing. Now, from a global market angle, I don't think that CrowdStrike, the things are over yet. You know why or not? Because after this round of all the outage, you know what's going to come next? You know what's going to happen next after all these outage? You type in the chat. Boonkit. Correct. The lawsuit is going to come. Okay, so you want to have a sense, hey, what is the bloody lawsuit going to be, right? What are we going to be seeing here? Are we going to see like the Johnson & Johnson type of lawsuit, or what type of lawsuit are we seeing? All right, so that is crucial to whether you want to invest in CrowdStrike or not. Okay? All right, so that's one reason. Okay, am I hanging? Just hope that I'm not hanging, because I think I have too many things to open. Okay, great. Okay, let me see. Any other stocks over here first? Okay, Google we talked about already. Kelvin say Microsoft. Okay, so let's take a look at Microsoft. Okay. Okay, how's Microsoft doing? Microsoft actually looks good. No? Microsoft looks good. Do you see a very nice bounce here? Microsoft. Okay. But one thing I will quibble is that the RSI didn't go to the low enough point like here. Okay. So I would not be surprised if Microsoft does something like this. So just now I was saying halfway is that when things are dropping, number one, take a look, wait for the bounce. Right. Number two is if it already bounced, you are going to buy. Please don't buy one shot. All in. Okay. For those of you who are my mentee, you know I always say whatever you buy in tranches. Right? Let's say you want to throw in 10K, right? You buy 3K, 3K, then 4K. Okay. So if the price continue to drop, that's fine. Yeah, you buy 3K here, 3K here, then finally maybe this is the bounce rate. Okay, then you buy 4K here. Okay. So it's about entering in tranches. Why? Because we are not gods. Okay. There's no way we can buy the bottom all the time. Impossible. I can tell you, it's impossible. I don't want to sell you a dream, right? In fact, out there, I saw some gurus selling trading program tell you, yeah, we're going to spot the bottom here, we're going to buy at the bottom, and then everything will go up. Come on. Okay, you are smarter than that. Okay, so yeah, we're not going to buy the bottom. What we want to do is we want to buy in batches to buy the average of the bottom. We roughly know that this is a low price rate, right? We roughly know it already. We just want to buy around there. We buy across a band so that we know our average somewhere here. So if the price go up, great. I'm not here in the business of picking bottoms. Don't do that, right? Don't pick bottoms, okay? Sounds bad, pick bottoms. Like very dirty. Okay, so let me see some question. Bubbles, or is it 80? Oh, it's a number. 8088. Okay, may I check what are those lines? Okay, so these are moving averages line. So these are 20, 50, 100, 200. Okay, so these are generally the moving averages that I use. Okay, right. So these are the solid ones. Let me see. In fact, in this environment, right, I like to buy the very not so interesting stocks. Okay, right. For those of you who know me long enough, I like to go for the very oddball stocks. I like to go for stocks that's very unsexy one. Okay, right. So one of them I mentioned quite a few times, right? Is AZO. Okay, for those of you who don't know AZO, Naresh said DHI. Okay, maybe they'll talk about DHI later. Okay, so AZO is a automaker, parts maker. Okay, so they are not competing with Tesla. They are not competing with GM or Ford. Okay, but if you look at their financials, okay, hey, how many of y'all has never heard of AZO before? Type in no. How many of you have never heard of AZO before? Type in no. Okay, so I give you all one of my best gems ever okay, because those of you who are my mentee, you know at what price I talk about AZO. You remember right? I talked about it when it was like $900, right? And back then when I talked about it at $900, you know what was the response from some of my students? Wow, P, it's so expensive. Okay, so one thing, guys, you all must remove from your head. The share price doesn't tell you anything about whether it's expensive or cheap. Zero. Okay, a higher per share price just means that the pie is being cut less, right? So imagine you have 10K, right? And I cut into 4 slices. So one slice is 2005, right? Which is like AZO like that. But if I have 1,000 slices of 10K being cut up, then each slice is what? $10. But the total value of the whole pie, is it still the same or not? It's still the same, okay? So the share price doesn't tell you whether it's cheap or expensive. The share price just tell you whether there's a lot of shares out there or there's very few shares out there. That's all. Okay? But let's look at this business. So what is this business? Can you see here? It's a retail business. They do parts. Okay? So they don't really care whether you are internal combustion engine or you are electric car. They still provide you with the parts, right? Because one thing I'm know for sure is this, no matter you are EV or you are internal combustion engine, right? There's one part that I know you sure need. Tires. Okay, you still need tires. You cannot drive with metal, right? You cannot drive battery. Okay, so if you look at the financial of this company, okay, this is a company that doesn't scream like a lot on. But can you see over the last 4 years, it has almost increased by 50% already. From 11 billion, now it's 17 billion revenue. Gross profit from 6 billion to about 9.5 billion, 50%. Right? So quietly, this company has grown half its size in the last 4 years. Last 4 years. Okay? Right? And this company, don't look down on it. You know, some people say, hey, brick and mortar, very lousy. Okay. The gross margin is 50%. 50 no, and above. Okay. Let's look at another company. I know a lot of people now, you're very itchy hand, itchy finger to buy CrowdStrike, right? But I just give you a comparison first. Okay. You would think that CrowdStrike as a SaaS business, the gross margin super high, right? You are not wrong. It's correct. The gross margin is very high. But that is insanity. You know why? Gross margin is like you're looking at the makeup. Once you remove the makeup, you know what happened? Can you see the operating margin? Guys, can you see the operating margin of CrowdStrike? Is 0.7%. 0.7. The brick and mortar business operating margin is 20%. Okay. So that's why even at this price, I don't know whether I'll buy CrowdStrike. Okay, but another thing is valuation. Okay, so let's come back to AZO. So this is the type of company I like. In a way, the way I invest is this. I like to do barbell investing. That means one side of my portfolio, right, I will have very high growth companies. I will buy things that are similar to CrowdStrike, but maybe better than CrowdStrike now. Okay, I don't want to buy this kind of super low operating margin. Right? I want them to grow. These are my spear, tip of the spear to go for it. But my shield is this kind of company, like AZO. That no matter is it COVID or is it economic crisis, the business just trots along. Okay, right? If you look at this business, right, the cash flow is very stable, right? And another thing is this company, they buy back a lot of shares. That is the reason why the per share price is so high. Remember, I just want to give you the pie analogy. The lesser you cut the pie, the higher the share price. Okay, so when they buy back a lot of shares, actually it benefits the shareholder like me, right? The share price increase. Okay, if I look at the ratios, I would say right now is definitely not the cheapest that you can buy for AZO. It's definitely not the cheapest. Okay, but overall, is it still pretty cheap? I would say yes. PE is 20, right? EV/EB is 16, right? Whereas you look at CrowdStrike, I know it's not the same to compare valuation. Okay, I want to be very honest, but the PE is 500. The EV/EB is 300. So I know it's not fair to compare a SaaS company and a brick and mortar company. SaaS company tends to have a bit more higher valuation. I do agree with that, but this is a bit too far-fetched. Okay, so I'm a very conservative investor in terms of valuation. So I want to buy the shield kind of business first to stabilize my portfolio. That's what I want to buy. Okay, so AZO has been a fantastic company because if you look at this company, right, if I just take the last 5 years, it has grown by 148%. And this business, the share price is so boring. It's so boring that I want to buy more. You know why? Because this is the stock that I can just buy and then go and sleep with. Right? So for those of you who are in my mentorship or in the stock market genius, the online course that I do, right? You know that I talk about this stock so many times when it was like $900. Okay? I keep telling people, hey, this is a very interesting company back in 2020. Right? Then when COVID time, it dropped to 900, I said, wow, time to buy. Because you know why? During COVID, right? You still have to change tire. You still have to change your oil. You still have to maintain your car. In fact, during COVID, you don't buy new car. You maintain your old car. You want to stretch your car lifespan as much as possible. Okay? So this is one stock that I just want to share with you all very quickly. Don't underestimate the power of brick and mortar. 300% since 2019. Right? We just put S&P at the side. S&P did 95%. Okay? So, interesting, right? So Terry said, can't go digital. Actually, I don't worry about this company going digital. In fact, they are very digitalized. Their inventory, everything digitalized. This company, you know what is so interesting? Is that AI cannot kill it. AI cannot change your tire. Or at least not yet. Okay? AI cannot change your oil for you. Okay? Even if AI can, AI will be an enabler for them. AI will help them to install the parts without humans, But where the parts come from? Must come from somewhere. Okay? Okay, cool. Let me see any other business that y'all want to look at. Banks. Very good. Very talk about BAC. So let's talk about BAC. To me, banks was a very underlooked. Okay, so I personally have a few things, right? I look at stock market. I teach stock market learning for mentorship, right? I do online courses. I do one-on-one for under mentorship. Another one I do personally is actually I manage manage accounts for my client, right? Those of you who invest with me, you know. And at the start of the year, I make a very controversial decision to buy a lot of the mid-tier banks. Not mid-tier, I would say they are mid-tier, but they are regional US banks, right? And there was a lot of like, hey, why you buy? Because before 2024, for example, BAC, can you see what's the trend? Bank has been down. Okay. In fact, I just look at XLF, XLF. Okay, this is the what I type in the chat, sorry. XLF. Okay, the financials. Can you see before 2024, right? Okay, it was down. Then suddenly it went up. Okay, now the thing is this. Of course, I had a bit of inclination that I think the banks will do well. Okay, so I explain to you why I think the banks will do well. Number one, this year, guys, interest rate will what happen? Will what? Will up, down, or left, right? Okay, cannot go left, right, sideways. Okay, most likely down lah. It's just a matter of one cut or two cuts only, right? Okay, so we know that the banks are going to have lower interest rate to contend with. But the question is, hey Pete, lower interest rate shouldn't mean that the bank will make less. Okay, let me explain to you very quickly. Econs 101. A lot of the borrowing is based on the floating rate, right? So in Singapore, they call it SORA, right? In London, they call it LIBOR. In the US, they other things. Okay, so the floating rate is usually accompanied by what we call a spread. So for example, when you buy a house, they will tell you that, oh, it is the floating rate, FR, plus a certain percentage. So last time, okay, when currently last time when the rate interest rate was very low, so let's say your FR is 1%. Do you remember last time when you buy houses, your loan is how much? This is the spread, right? Your loan is how much? Your loan is maybe 1% plus 1%, something like that, right? Or 1% plus 0.8. Okay. But ever since the floating rate went up, let's say your floating rate now go up. Go up to 3%. Hey, guys, what do you think your spread will be? Your spread will go down or go up? Can you type in the chat? Your spread will go down or go up? Do you think the banks that dare to increase the spread? No, your spread will go down because now it's already 3%. If I plus another 1%, that's 4%, you know. So a lot of the banks started giving very low spreads, 0.5. Or 0.4. Now it's 0.4. In fact, those of you who need a loan, you can ask Ethan. Right? Now our floating rate is the floating plus 0.4. You know? So what does this mean? This means once the interest rate go back down to 1%, what will happen to the spread? The spread can increase, you know. So imagine the banks last time, they don't earn your 3%. Actually, what they earn is the spread. So whatever earnings you see the bank have right now, when the interest rate goes down, it will go up. So guys, when the earnings go up, what naturally will go up? Share price. Okay, so that was my thesis for buying banks. Okay, but one more thing is this. Is a logic that I've been following for years. Is that I would also like to buy whatever has underperformed the year before. Okay, I like to buy industries that for the last 1 year or even 2 years that has not performed as well. Right. So in the last year, 2023, actually the whole industry did really well. S&P did fantastic. Okay, if I just put in S&P here, you can see. Okay, right. In the whole 2023, S&P went up, no. Right? But the banks didn't go anywhere, no. Right? So that's why I also like to buy banks. Okay, so for those of you who were in my management account, now you understand why my logic of buying banks. Okay, so these are the type of sectors that I like. For BAC, I would say very easy. Banks, just look at valuation. BAC is definitely a solid bank. It's a good bank, right? Let's look at valuation. In terms of valuation, I would say at this point in time, it's not very cheap. Okay, it's not very cheap. Why? Because if you look at price to book, it's actually at quite a pretty high level. You want the price to book to be at a lower level. Best is less than 1, right? So you should be buying BAC when it was less than 1, because at the start of start of the year, when the PB was less than 1, you go back and see. Okay, right? Exactly this point. Okay, so when the price to book is low, is your good chance to buy. Right? Your price to book is less than 1, is your good chance to buy. Okay, so this is price to book. Okay, let me see any other companies. Elijah said Nike and McDonald's. Okay, Nike, I feel that they have a management problem. Okay, but I'm not invested in Nike. Okay, so for me, is this. I look at both the fundamentals and I look at the chart. Okay, so when I look at the fundamentals of the business, okay, let's see. Let me just show you Nike very quickly. Let's look at quarterly. Okay, you can see that the quarterly business is a bit unwieldy lah. There's like minus, then there's plus, plus, plus. Okay, if you look at income, also the same, right? It's like up, down, up, down, up, down. In fact, the income has been not growing for a while already. Okay, on a quarter-on-quarter basis, right? So to me, is the fundamental is not improving. Therefore, I don't see the reason why the share price will improve. Okay, so that is the number side of the picture, right? And in fact, if you look at valuations now, is it like extremely cheap? Not really, right? It's still 21 PE. It's still 15 times price to, right? So given this kind of valuations, I would rather buy AZO, to be honest. Okay, right? So I would not be touching Nike, but from the technical perspective, to me, is the trend needs to be broken. The trend is very, very obvious, right? So that, yeah. So to me, is I don't have to catch a falling knife. I have to catch the knife when it stop falling, right? When there's blood on the street, I'll go and take a look, but I won't buy immediately. I want to see the proper recovery from here first. Okay, but overall, I don't really like Nike as a business anymore, right? Because their marketing, I think they've screwed it up. They tried to sell their shoes themselves and they cut off all the third-party seller, right? That was a mistake. That was a big mistake because Foot Locker, all these used to be very good promoters of Nike. And it was a huge mistake that they made. Okay, but nevertheless, I think the management now they're trying to recover from there. Okay, all right. Okay, okay. So AY say MA drop, Visa drop. Wow, actually very very happy. Woo. Okay, so Mastercard. Okay, let me go back to daily chart. Okay, so you can see daily chart now is still like sideways. I bought my call options here. So when now come to here, of course my call option not making money. Okay, but can you see I'm smiling? Once again, when you're buying call options, it's like buying shares. Don't buy at all at one go. So I bought a few here. I'm thinking, hey, wow, maybe tonight I should buy a bit more. Okay, maybe tonight I should buy a bit more. Maybe when it bounces a bit, I'll buy a bit. Okay, I want to be very disciplined here. So please don't influence my decision. Okay, so this is good. But when I zoom out to weekly chart, wow, can you see that it's coming down very nicely, finding good support here. Hopefully the bounce will happen soon. But over here, can you see the MACD is great, right? Stochastic is fantastic. Can you see stochastic is starting to turn up already? Okay, right. So no worries. I'm just waiting to buy more only, right? Same for Visa. Actually, Visa and Mastercard, the chart looks very similar. I don't think you need to buy like both. I just buy one. They move exactly the same. I show you. Can you tell the difference? I can't. Okay, I can't tell the difference. All right. So yes, like what Celine said, a lot of good companies on sale right now. It's just a matter of like, do I have money to buy or not? Okay. Another thing I like to buy for my barbell strategy is I like to buy some the high growth part. For those of you who know, the high growth part of my strategy, one of them is BTC. Okay. So if you look at BTC, right? So let's put Bitcoin in. I just choose one of the ETF first. Okay. Right. In fact, tonight, BTC has gained 2%. While the whole bloody world is like all in red, right? BTC is up 2%. So that is, to me, the way I like to invest. I like to diversify not just across sector, across company. If there's something that I can also include in my portfolio through the stock market that is of a different asset class that I think there's growth, I will look at it, right? So that includes Bitcoin. Okay, right? Bitcoin went up 2% today. GLD gold went up by 0.78. Okay, I'm not a very big fan of gold generally, but I'm a big fan of Bitcoin, right? So to me, Bitcoin is very simple. Whenever there's a dip, I buy, right? So recently, when Bitcoin had a dip down, those of you on my Telegram, you will know, right? When Bitcoin dipped down to 57,000, I was like, telling you all I'm buying, right? I was telling you all I'm buying, but I never say you all should buy. I just say I'm buying. Okay, so to me, is Bitcoin, I just buy with confidence. You know why? Because right now, Bitcoin has already moved from a speculative asset class to an institutional class, right? There is very little chance that this asset class can die already. I don't talk about the upside first. I just talk about the downside. There is no way this Bitcoin asset class can be removed from the industry that it disappears, because it's so entrenched in the institution already. There are trading desks for this asset. There are futures for this asset. It's an ETF already. That means a lot of the pension funds are maybe buying into it, the retirement funds are buying into it. So the more adoption there is, the stronger it is. Okay, right? So AY, can we buy? Oh yeah, you can buy BITB in IBK. Okay, in fact, I think there are 12 of them, so you can choose whatever you want to buy. Okay. Okay, Joe is asking, should we buy call option or stocks? I would say to determine whether you want to buy call option or stocks, right? The answer will come from yourself. Okay, I tell you the differences. Number one, stocks you can hold longer. Okay, call options there will always be an expiry date. So depends on you. I always like to buy longer expiry date. I like to buy 2 years, 2.5 years. So to me, expiry date is not a problem. Okay, number one. Number two is this. Options has a leverage factor. Option usually is leverage up to like 3-4 times compared to just buying shares. That means if your shares return you $1,000 in profit, your option can return you $3,000 in profit. Okay, 10% in stocks, right? 10% in stocks, not in dollars, but 10% in stocks, option can return about 30%, 40%, right? So that is the benefit. So whether you like to do options or not, it depends on number one, whether are you competent with options, are you familiar with it, are you comfortable with it? Okay. If you're not comfortable, please go and I'm gonna like selflessly promote my online course. Just go buy my online course. Okay. I have a very simple online course that talks to you how about doing options, right? That one should get you sufficient. Okay. If not, just buy shares. Okay. I always tell my students, while options is a very powerful tool, but if you don't know how to use it, please don't do it. Okay. Because powerful tool, it means what? You can hurt yourself. Right? It's like a rifle. If you have a gun. Recently we know, right? Donald Trump almost got assassinated. Okay, so a gun can be used to fight a war or can be used to kill your president. So what do you want to do with it? Okay, so must understand how to use it. Very important. Okay. Jasmine's asking, will the stock market rise if there's a rate cut? I would say in the short term, yes. In the short term, once the cut happen, it will spike up. Yeah, in the very, very short term. But in the long term, I would say the effect is less so. Why? Because in the long term, the effect of the stock market is driven still mainly by earnings. The more earnings there is, the more the share price is a matter of just multiples, right? Because for example, where is S&P now? It's very simple. The S&P is just a multiple of all the S&P 500 earnings add together. That's all. Okay. So right now, S&P is at 5,000 because the earnings is like 200 plus, right? So the multiple is about 20 plus, right? So if the earnings got to 300, then your S&P will go to 600 or 6,000. Okay, right? So that's how it works, right? Okay. Isaac say boo spread. Okay, so generally I don't like spreads. I know a lot of trader use spreads to trade, right? So if you know how to trade, good for you, power to you, go ahead. But I don't really like spreads lah, because spreads to me is a bet. You're just betting whether the shares will go up or down, and there's a limited time frame. I prefer to either buy shares or do long call options, because the share price can go down momentarily. In fact, every time I buy something, I think Sancho and Naresh will know. Every time I tell you, if I buy something, just wait a bit, because very likely after I buy, what will happen? The share price will drop for a while, okay? Right? But am I faster by it? No, because I'm not looking at the short-term drop. I'm looking at the long-term gain from here, right? So that's what I'm looking at. So I'm not worried about short-term, and therefore I don't really do spreads, because to me, spreads just limit your upside. Why do I want to limit my upside when I'm fairly confident about the company, right? So yeah, so I don't really do spreads. I only do it when I feel itchy, when I know my gambling finger itchy. So the thing is, I'm not God, okay. I still play a bit here and there, but it's a very small percentage of my portfolio. Very, very small percentage. Okay. PS asking between strategy X and X plus. Okay, so for those of you who have not attended OMI, X is basically buying call options. X plus is you buy a call option and then you sell short-term call option on it. If you have no idea what the heck I'm saying, please don't do it. Okay. Please go and attend OMI if you have never attended before and you want to understand more. Okay, so what do I prefer here is depending on situation. In the current market, actually, I don't mind having some X plus, because now a lot of the shares are topping. But for the tech companies now, they are very, very deep down. You don't want to do X plus. I wouldn't. Right? I will do strategy X. I'll buy call options. I wouldn't go and sell call, because once again, I don't want to cap my upside. That's just stupid. Okay, stupid. Okay. Let's look at some stocks again. Let me just share screen again. BTC. Okay. Still showing BTC here. Okay. Meta. Okay, let's look at Meta. Wow, Meta is one of my like favorite, all-time favorite. Okay. So Meta right now, very, very solid. If you look at the daily chart, it looks like something is breaking here. But I just want to zoom out a bit, right? If you look at the weekly chart, it is very well within the expectation. Well within. Okay. So I like it a lot still. Right? Well within. Okay. Although here, I would say there's still more room to go lah. Right. So I would be surprised if it come down a little bit more, and jump. Right. But Meta, I have like full position. Right? I'm like more than 20% in Meta, right? So enough. don't so one thing, guys, you all must remember is position size. Don't over allocate. You're gonna have a lot of trouble. Okay. Don't over allocate. Now, Jasmine asked a question. My long call for ANET is at 30% loss. Expiry June 25. Will you advise me to keep the position open? Okay, so let's look at ANET first. So overall, I think there's nothing wrong with ANET, right? When we went in like May period, now it should be up. I don't know why you're in 30% loss though. Maybe you entered here, then the dip happened. Right. So one thing is this, guys, when you all buy call options, right? Please buy at support. Okay. So if you want to buy call option for ANET, okay, I need to check the volatility first. But if you want to buy call option on ANET, please don't buy here. Okay. Don't buy here. The only reason you will see 30% loss is because you bought here. All right. Please buy at the support. Even if you cannot buy the support, buy close to the support, you will also be fine. Okay. Buy close to the bottom, also be fine. Right. ANET, very strong company, solid business, beneficiary of the whole AI industry, right? Generally. Okay. So I would say, Jasmine, once again, buying call option is never about buying one. To me, is this: if I buy one already and drop some more and I like the business, I'll buy more. I won't worry about the first one yet. Okay. I'm accumulating it. Okay. I'm a very weird. People like to trade options, right? I say I don't trade options. You know what I do? I accumulate options. I accumulate call options. Okay. Some people always say, hey, Pete, when we buy call options, should close early. To me, is this: have I held options to expiry before? No? I have, and I still make money. Okay. Right. So there are more than one ways to do options now. Okay. Jasmine, what's the difference between Iron Condor and Shredder? Jasmine, if you're asking me the difference between Iron Condor and Shredder, right, you shouldn't be using it. But honestly, I'm not here to diss anybody, but I'm just saying outright. All those very complex option strategy, right, sounds really good. But if you really go and ask those traders to show you their P&L, right, they don't make jack shit. Okay. I really don't like it when people keep thinking, oh, you should do Iron Condor, make a lot of money, high percentage. The problem with this, when you do this kind of trades, right? Number one is, yes, you may make 100% one time. The question is, can you do it second time? Can you do it third time? Can you repeat? Right? Very hard, no? Very, very hard. And the thing is this, when I do all these trades, right? Or when you do all these trades, the question is, how much money do you put in it? Not much, right? So even if you make 100%, how much do you make? $10, $10, maybe $100, $200. I give you $1,000, happy enough. Okay, but can you do it over and over again? There are people who make money through trading. I have no doubt. And I know some of them also. I know very, very good traders. And I can tell you, the very, very good traders I know, they are not complicated one. They do very simple things. They just do it in a smaller time frame than me. That's all. They don't do fancy shits. Okay, this one cannot put YouTube, right? Once I say shit, that means they will demonetize. Okay, so, right? But you can see how angry I am when people ask me this kind of thing. Because our industry is being tainted by a lot of this kind of teaching. That teach people, hey, you should do fast trade, Trade every day, trade until every day you get money. Wow. I can tell you, just drag their students out, you just look at their P&L. Die one, sure die one. Okay. I show you, I have this tracker that I show the stock market genius guys. Okay. And I just do like simple stuff. Okay. And in fact, I just show them like, okay, if we just buy some stocks based on when I talk about it, right? And I just add out the P&L. And I don't sell one. I tell them I just buy and I hold. Okay. When I sell, I'll tell you but I just buy and hold. Can you see like overall, the gain is like 300%. And this 300% is not $1,000 right? Because when you buy good companies, you can buy with what? Confidence. You can buy much bigger sum. You can buy $10,000, $20,000 if your portfolio is big, okay? Because when you're trading $500,000, you still deploy $1,000 each time. How many times you want to trade? How many times? Okay. Even if you have a 100K portfolio, you trade 1,000 per trade. How many trades can you do? 50? 100? Are you sure you can manage 100 trades or not? Right? So ask yourself that question before you say, hey, I'm going to be a trader. I think I'm going to make money. Because a lot of time, traders that are not very good, the problem is what? They don't track their performance. Because good traders always track their performance. And if the performance is not good, they will change. They will either change the strategy or they will say, I don't trade already. But a lot of the not so good traders, they don't track. They lose money, or they also don't know they lose. They just keep doing a lot of things. Right? So over here you can see, are there some losses here and there? Of course, I don't want to lie to you that everything that I choose go to the moon. But the good ones can really fly. Can you see? Right? So, and I only start tracking last year, September, I start tracking my ASML, then I track the rest. Right? So, guys, don't do fancy things. Right? Do simple things. I just put this tracker in my stock market genius course to give students that confidence that, hey, if you buy the strong companies, you can make it. Okay? Right? Okay, let's go back to questions. See if any more. 很多诶。Wait, let me see. Okay, Dean is asking, how about MU and Dell? Okay, let me see. MU is Micron, right? Okay, so this one, good. I think it's coming down to the 200 moving average, but I will wait a bit more because the bounce has not happened yet. Okay. Financially, I'm not sure if MU is good financially. Let me just quickly check. Okay, the cash flow is not too bad. Okay, let me see the income. Okay, pretty good. I mean, it wasn't so good lah. Okay, right. So only this last 2 quarters a bit better. So to me is I generally don't like to buy companies that are a bit like too uncertain. Unless you tell me that this is a super high growth that can be the tip of the spear type, then I'll consider. Okay. But in terms of valuation, well, very hard to say. Okay. So I would say to me, this stock I won't even touch because to me, I have this pile of stocks, right, that I put at the side of my desk. It's called a too hard pile. That means it's a stock that is too hard for me to understand, right? But I really don't see the upside. So unless I can really see the upside, then I'll say, okay, if it's hard, I'll still put in the effort to go and study more. But in this case, I would say MU, I can't really see the upside because there's so many competition and they're not like a main player in the semiconductor industry, right? So maybe good to be the employee lah. I'm sure they pay a lot. Okay, so good to be an employee doesn't mean good to be company. Okay, doesn't mean a good investment. In fact, I've seen a lot of companies that pay the employees are super well, but they don't make very good investment. Okay. Let me see. Thanks asking, what if the capital allocated for that stock is only enough for one call option? Okay, very good. Just now I say I'm going to buy a few call option, right? So if let's say if you're buying something that's higher price, for example, Apple, then you can only afford one call option. Then you need to be a bit more selective. You really need to wait for the technicals to really hit down and bounce, then you start to enter. So in this case, I would say if you can only do one call option, right? Hopefully, after you do one call option, you can buy some shares. So in that way, you still can dollar cost average. You know what I mean? Right? Then you can dollar cost rate by pairing up the call option and the shares. But if that is not enough, that is not possible, I would suggest you don't do the call option. Just do shares. Because I feel that the opportunity of you entering multiple times is way more important than one call option. Because if you're doing one call option, that means you can only do one time. You are once again picking bottom. You have to be God. And we are not. All right. So that is the main thing. Okay, Nvidia at that price at me. Which one? Oh, the tracker. I think so. I took it for my thing. Let me see. Maybe I'm wrong. I don't know. May 30th. Let's see. Hope I never tracked wrongly. May 30th. Oh yeah, maybe a bit. What price did I put? 62. Oh, okay. Maybe not 62. Maybe a bit higher. Let me change. May 30th is what? Oh, 109. Okay, let me change it. Why do I bid 62? Okay, good. Okay, 8%. Okay, good. Okay, still got 250%. Not bad. Not bad, right? Okay. Okay, great. Jasmine asks, under what circumstances will I put a trail stop? Okay. If you're trading, you should. If you're trading, you should. But if you're investing, I usually don't put trail stop. You know why? Because I don't want to get stopped out, right? For no good reason. Okay. So if you're an investor actually getting stopped out by a fluctuation in share price, that is your worst nightmare. that is your worst nightmare. You know why? Because I've seen students who previously put trail stops in like Amazon, right? Then whenever Amazon pull back, they will sell their shares. They sell already. Then the problem is when the share price recover already, they don't know whether they should buy now, right? Because they think that, hey, what if the share price drop again, right? There will always be this nagging thought, you know. So for me, is to remove that nagging thought to make yourself a better investor psychologically, right? For those stocks that I want to hold for longer term, I don't put trail stop. But if you're doing a trade, by all means, right? Because trading, you have very clear take profit and stop loss criteria. Very, very clear on that. Okay? Right. So yeah, I don't do that at all. Lululemon financial is good, but why share price so low? Then good lah. Then you want to buy, can buy more. Right? Lululemon, I'm still waiting for the next bounce. Right? So honestly, I did one tranche here already. Okay. I'm still waiting for the next bounce, right? For me to enter another tranche. Right. But I'm telling you, I really like the TA part. FA, I know it's very good already. I know you look at it. I really like what I'm seeing here in the FA part now, TA part now, because now you see the share price going down, right? But the MACD is heading up. Okay. RSI is also heading up. Right. So this is usually what they call a divergence. That means it's like a coil spring that's being like really being very, very, very tight. Then once the coil spring you release, what happen? Boom, you jump. Okay. Right? You just fly. So I don't really mind that it's dropping. I'm just waiting for more clear confirmation. Can you see that previously I draw a confirmation jump here, but it didn't happen? So be very disciplined about your investing, right? If it jump, great, I enter. Never jump, don't buy. Just wait. Okay. I never want to predict what's going to happen next. I want to trade what is or invest what is in front of my of me in terms of charts. Okay. I want to see what is in front of me. Jasmine said, do I teach option trading? I wouldn't call my style trading, to be very honest. I tend to buy option and sell option for a longer period of time. Okay. But if you all want, you can just go to my stock market genius. I think it's my Telegram, if I'm not wrong. Yeah. You just go to my Telegram. The stock market genius link is there. Because previously I think I shared that I put in some of the stuff in stock market genius. Right. So what I'll do for stock market genius from here on is I'll do more updates in terms of like what are my stock selection, what are the things I'm looking at, right? Because I know the community there wants me to talk to them more, right? But recently, the stupid Telegram, right? A lot of scammers. So I wanted to actually discuss more in the Telegram, but too bad. I really had to shut down the discussion channel for a while because there was too many scammers and there were people being scammed left, right, and center. It was crazy, right? So I don't want that to happen to anybody. Okay, so thanks, say just subscribe. Yes, good. Thank you. I'll see you in the SMG more. Okay. So you will see that one of the stock that I just mentioned, SMG. Okay, let me find where's my do I have the link really here? Oh dear, I don't think I have. Oh, this is my property one. Maybe I can go to the stock market genius from here. Let me see. Okay. So if you go to my teachable, right, you can see there, SMG, stock market genius. Okay. So why I call it stock market genius, it's not that I'm a genius. Okay. I use it from Charlie Munger quote. Basically, he's saying is that we are not genius. We are doing better because other people are making silly mistakes. Right? So how to be a stock market genius? Very easy. Is to minimize the mistakes that you make. That's all. Okay? Just minimize the mistake. So recently we talked about a certain stock. Okay, I don't want to spoil it for you. So, can I go in and see? Okay, you can subscribe. You can either take the yearly subscription or the monthly one, doesn't matter which one you choose. Yeah, so we talk about recent stock in July. I'm very excited about this stock. Okay, I don't want to spoil it for those who haven't read it yet. For those subscribers haven't read it, please go and read it. I think potentially this could be one of the shield type of stocks. I love it. I've never got so excited about a stock since I found AZO. Okay, I really like it. Okay. Let's see. CrowdStrike. Oh, I talked about CrowdStrike already, so I won't repeat. You can watch the recording. Okay. So Jasmine, if you want to look at my options course, just go to the online course. To me, that's enough. That's enough. Right? Or you can go for OMI, also can. Both are good. If you want something that's more live, more interaction, then it's OMI, right? Option mastery. Otherwise, you can just buy my online course. Let's see. Dean say to do call option for investing purpose at minimum exposure, is it wise to take out long call option, long DTE? Oh, very OTM. No, I won't do it. Because when you say very OTM, right, it depends on, firstly, you must know where is that OTM, right? So for example, let's say let's say for, I don't know, let's just give an example. Let's say for MasterCard, okay? Right? We think that, wow, MasterCard is very good. Okay, so what Dean is saying is that, hey, instead of me buying a call option at this point, right? I buy a very out of money one. Maybe I buy 500. Okay. But the question about out of the money, right? Okay, so for those of you not aware, out of the money means the strike price of the option very, very high. Okay. When it's very, very high, actually there's one uncertainty. Is that when you say 500, for example, when is it going to reach 500? Is it going to be like that? Or is it going to be like that? Because if the expiry is somewhere here, right, then there's no way your out of the money call options can make money, right? Because you only make money when it's here, ma. Okay, so I wouldn't really do very out of money. Instead, I want to do at the money. I don't mind paying a bit more so that I pay less for time value also. Okay, it's a bit complicated, but generally, if you pay more for intrinsic value, you pay less for extrinsic value, which is good. Okay, so that's the main thing, lah. Okay, Manchun is saying, Google, why is the quarterly result good but the price is retreating? Very good. Okay, everybody, look at Google. This one also another favorite. Why do you think Google share price is dropping, but they have very good earnings? Why? Put in the chat. Why? Okay, maybe another few more minutes, then we'll end this session. 10 o'clock, 11 o'clock. Why? Why do you think Google share price drop? Wow. Okay, right. The answer is their forecast. They lowered their forecast by a little bit, right? So the market didn't like it. But when you look at the forecast dip, right, it's not such a big deal. Right? It's really not, no? It's really not such a big deal. Right? So I honestly don't know. Yeah, earnings. So I honestly don't know why they have such a big reaction, but it's good. Whenever the market has a big reaction, that's when we make money. Okay. So can you see over here? Over here, everything is beat, right? The only thing they did was I think they lowered the estimates. See whether they say it here. Yeah, I don't think they say it here. But when I read the earnings call, they lowered the expectations, right? Hey, to me, which is good, no? That means what? There's a higher chance that they'll beat again, in this quarter, what? Okay, so that's my meta way of thinking, Meta always do this. Meta always under, then they okay, then they go for it. Okay, let me see. Jace is what? AAL. What's AAL? American Airlines. Okay. Wow. Sucks. No, I won't touch it. Let it go, man. Let it bounce first. Okay, let it bounce first. Okay. AY is asking for the MA synthetic. Okay, yes. So for those of you who saw my previous entry, right, I did a synthetic for MasterCard. Okay, if you have no idea what I'm saying, what's synthetic, what is this? Please don't do. Okay. So previously I did a synthetic when it was around here, right? When it was bouncing, right? So now the synthetic, okay, I shift to 450 first. Right? So now it's dropping. So what's gonna happen is this. My call option will expire, but my sell put will get triggered. So I will buy the shares. Okay, I'm happy to buy the shares. I'm happy to buy the shares. Right? Because I just want to buy MasterCard around here. I don't care. I don't care where it is. In fact, after drop already, okay, if it bounce, I will do again. I'll do another synthetic. Okay, but doesn't mean that you should follow me, because my portfolio is a lot bigger. I'm dealing with 8 figures, so please don't follow me. Sometimes the things that I do, the proportion might be bigger. Okay, so you must do according to your portfolio. Please position size, right? For all purposes and intention, when I share, I want to share explicitly what I'm doing, right? Especially for those of you who are in Stock Market Genius, my SMG course, I will share exactly like what are the trades that I do, but you need to tailor to your portfolio size. Okay, so for me, I'm a collector of options. I know this is very weird, right? But I collect options. So I did one, it's coming down. No worries. I do one more. I do one more. I do one more. Because eventually, if the price starts to recover, then even this one that I did earlier on will also make money. Right? So just give it a bit more time. It will expire soon. I think it will expire like June. So I'll get the shares here. I'll still make money. Okay, so you see, the mindset of you entering the trade is very important. You must think about the exit rate. What am I going to do when this happens? What am I going to do when that happens? You should never enter a trade, right, without the exit strategy, without the exit plan. That's very key. Okay? All right. For Visa, I would say same. I'll wait for the bounces. If I want to do, I'll wait for the bounces. Yeah. But for me, I don't do Visa, I do MasterCard. Okay, I don't do Visa. I only do Mastercard because the trend is the same, exactly the same. The movement is exactly the same. But if you look in terms of like efficiency, Mastercard is a slightly better business. Okay, understand that, right? Okay, right. Okay. Thanks. Can you share? Can you please share options in SMG? Yes, I will share more options in SMG. Exactly. Okay. All right. So this is it. Okay. Anything else? Wow, the market how? Wow, Nasdaq for some more. Okay. What else? What else? Hey, but interestingly, you know what I was gonna say? Interestingly, the bonds never drop. Why? Because these days, right, what happens is the bond and the stock market tend to move together. But interestingly, bond never drop. Okay. Right. Okay, but don't you speculate. Never drop. Lor. Okay, what went up? Gold. Is it gold? Let me see. Actually, very few. Mining went up. Oil went up. Yes, oil. So oil is my shield. No? Okay, a lot of people don't believe, but oil is one of my shield. To me, oil is doesn't really fly to the moon one, but there's only so low the oil price can drop. So I like. Okay. Let's see. When do you? Wei Ling is asking. So when do you buy back the same long call position? When the price bounce off. When the price bounce. But take note, when you're buying call option, first and foremost, it's not technical analysis. It's not all these. Please, the most important thing is what? Guys, can you type in the chat? What is the most important thing when you are looking at doing call options? Because I'm doing call options for 2 years, 3 years, Yes, please. Fundamental analysis, right? In the short term, the share price and the fundamentals may not correlate, but in the long term, it will. So you must have the fundamental analysis in. Okay. So for those of you who are in my Stock Market Genius online course community, I'm generally not a trader. I want to set the expectations right. If you're a trader, you think you can trade, you can make it on, by all means go and try. I know out there's a lot of gurus selling it right now. They tell you, I can do daily profit, trade until you go to heaven. Please go ahead. Okay, maybe you lose some money there, you'll come back. Okay, I've done trading my life. I'm not saying you cannot trade. There are traders that can make money. Yes, but very few of them. It's very, very few of them. They are the cream of the crop. It is like you looking at NBA and saying that you can play like LeBron James. You maybe can, but very unlikely. Okay, so my sincere advice to most people is you can go ahead and try trading, play with the money that you can afford to lose. After you play already, if you realize it's not the game for you, go back to proper investing. Very, very important. Okay, fantastic. All right. Okay, what's your take on Nike and Disney? I think I talked about Nike already, right? Let's talk about Disney, very quickly. Wow, same, right? So this one, right? Basically, the trend has not changed. There's no bounce, no nothing. So I wouldn't enter yet, right? So it's like the falling knife. I want to wait for it to fall. But I don't like the fact that the EMAs are all crossing. So when this cross, right, usually the fall will fall faster, fall more. Okay. And the earnings is coming. I believe the earnings will not be that great. Will not be that great. Okay, because they already said that their Disney Plus didn't do as well, right? The theme parks are recovering, but not as fast as they expected, not as well as they expected. Okay, so yeah, so this is the thing lah. Okay, and personally, I really don't like Disney theme park these days. I feel that they are super overcharged. They fleece all the parents, but when you go inside the how to say the experience is not as good as last time. I don't know whether you all feel it. Those of you all who go to Disney Park. I recently went to one. I feel that the experience is way worse than last time already. So I generally don't like things that I generally don't invest in things that I don't like. Okay. All right. Okay, last one. I think Mary has a good question that we can end off with. She said, would you suggest for stocks that are difficult to reach a reasonable price? Oh, okay. So what Mary is saying is Costco, right? For example, Costco has this nagging problem. I also like Costco. Costco is one of my shield. Can you see what I do a lot of things here? I do a lot of buy call a lot of sell call okay, a lot of things Okay, so Costco is one of those stocks, right, that has never been cheap on. Okay, do you realize that? Okay, I let you see annually. Costco has never been cheap. The PE ratio has always been high. In fact, now Costco is at an all-time high in terms of PE. Okay, so what it means is that if it's an all-time high, then I won't buy now lah. Okay, but what it means is that if it ever reverts back down to 40, 40 PE, or price to cash flow ratio back to like maybe 20, 25, then I will consider entering. So that's why I talk about relative valuation, not absolute valuation. right? It's all about relativity. If the relative ratio is 29 for EV/EBIT, then okay, when this one drop back 29, then I'll start looking at it. Okay. Right now, can you see the price is coming down, but not quite there yet? Right? Very, very clear. RSI is not enough. MACD is not enough, right? So not quite there yet. I bet I already draw the line for you somewhere here around 820 yet. Okay. So never chase the valuation, never chase the stock. Okay. But is it a good company? Yes. In fact, I think it's one of the stock that I bought before, right? I haven't bought before. Okay, because the valuation not ready. Okay, so yeah, right. So take note of all this. Okay, fantastic. All right. PS, I sold it around 565. Okay, so maybe one last thing before I go is that if you buy into a good business, actually best is not to sell. What I will do is if I feel that it's very overpriced, then I'll convert more of my options into shares, so I'm not so aggressive. But when it's cheap, then I'll buy more options. Okay. All right. Okay, guys. 11 o'clock already. I don't want to drag you all any further. I'll create more content for the Stock Market Genius. For those of you who want to subscribe to the Stock Market Genius course, online course, right? You can do so. Let me send you the link now if you all want. Okay. Okay, let me put it in the group chat. Okay. All right. So this is where I will share more timely content whenever I have. I just share. But for those of you who are already my mentee, okay, just let me know. I give you a clue. Just let me know. Okay. All right. Okay. Fantastic. Good to have all of you. I will focus on more time. I wouldn't wait for my mentee to cancel on me before I come on again. Okay. I want to really refocus back into investing a bit more. Right. But I'm not giving out on the properties. I'll let you know. Okay. So I share some of your my plans going forward is that I will do property on YouTube. Okay. But in my newsletter, in my Telegram, all these, right, will be more stock market focused. Because really these two asset class, right, to me, is the best. They complement each other very well. It's like a handshake, Okay. Stock market is like once again, barbell investing. Stock market is the spear, right? When the market does very well, boom, right, we are all going up the moon. But when the stock market doesn't do well, like 2022, when there's a big pullback, bam, then we all suffer, right? Then that's when your property will come in and save you. Okay. So I like property. Property is like a bit recession proof in a certain way, right? You just slowly goes up. No surprises, but every year give you like, 6-7%, 6-7%, 6-7%. But 6-7% on like a few $1,000,000 is a lot, Okay. So I love the stability it gives. I love the leverage because I buy a 3 million property, I don't have to put 3 million. I only put 25% on 3 million. But when the property gain 10%, it's 10% on the 3 million, not on the down payment. Okay, so these two works very well hand in hand, and it tends to be like that, because in 2022 when my stock market portfolio dipped down, guess what went up? My property went up. Okay, so I'll talk more about property on YouTube, whereas my newsletter and also online course and Telegram, I'll focus more on stock markets. Okay, all right, that's all I have for you guys. Thank you all for coming. Wow, 200 plus of you still stay here with me until 11 p.m. I'm very, very grateful. Thank you for your attention. Okay, and I'll do more to add more to the community. Okay, that's all I have. See you all soon. Bye-bye.